So glad you could join us here on a Tuesday, the morning after we get USDA's crop condition report and crop progress report. Those numbers came out yesterday afternoon from USDA, and we'll cover it right here. This is a special version of our morning update here, the pre-market report, where we're going to invite in a couple gentlemen. I think you know them well. First of all, we have Rich Nelson of Allendale joining us from McHenry, Illinois, and we have Steve Georgie, the president of Allendale in McHenry, Illinois, along with my colleague John Jenkinson joining us here. So we're going to do the Brady Bunch thing here and just all kind of gang up and take a look at the markets. And first of all, Rich, I wanted to talk with you about the USDA numbers that came out yesterday afternoon. We had the National Crop Condition Summary that came out. And in those numbers, if we can take a look at the screen here, we had the corn coming out at 61% good to excellent this week, and that compares to 61% last week, so no change there. Soybeans, 64% good to excellent, and that's up 1 point from what we had last week. The cotton actually declined a couple of points, down to 43% good to excellent. Grain sorghum stayed the same at 51%. And the peanut condition actually went down 5 percentage points, all the way down to 63%. Now, we did have those numbers, and then we also had, just a couple of moments ago, John printed out this new information from USDA. It's an overnight export sale, and we can add that into the mix as well before we open today. We sold 100,000 tons of soybeans to Mexico, not China, but Mexico. It was an interesting sale here that showed up this morning. You don't think of them as buying soybeans a whole lot. Usually you think of that more as a corn purchaser. But Rich, all these outside data flows that have been coming in since yesterday afternoon, including that new sale this morning, what kind of impact may they have on the trade with the big report coming up tomorrow?
And that's certainly the question here for us this morning. I think right now, especially with the way this market's traded in the past day or so, we probably are looking more of a mixed action for today's discussion. Like I mentioned, harvest numbers relatively within the trade expectations. And as far as sales, nothing dramatic to give us a big boost here for today's discussion.
Let's take a look at what the corn market was doing overnight and see if we can get a clue for what we may see on the open this morning. So the corn market, it was a little softer again overnight. Remember, we started out very weak yesterday. December corn 3¼ cents lower overnight at 363.5 per bushel. And if we take a look at our soybean prices overnight with these quotes provided by bar chart, we have the November contract 5 lower at 991.25, so just 1/4 cent off of our low of the overnight range there. And looking at the wheat in Chicago, we had the December wheat down 1.5 pennies at 548.75. In the Kansas City market, we had the hard red winter wheat down 1.75 pennies at 481 per bushel on that December contract. On the spring wheat trade, we had Minneapolis December down 1.5 pennies at 528 per bushel. And want to mention the cotton market overnight as well. We had December going down 70 points at 64.99. 64.99 cents per pound. I want to take a look at what happened in the corn. If you look at the chart patterns here, and Steve, my next question is for you here. When you look at the pattern of the corn market, where we did have that sell-off recently, it did show sign of strength yesterday. That was a bit of a surprise after a week open there. But how do you think it's actually positioned ahead of the report tomorrow? Because we had funds net long over 95,000 contracts here.
You know, we've got a couple things. And obviously, as we talk about the fundamental side, we talk about the export sales. That's nice. But we also have to talk about the emotional side of this corn. As you mentioned, that corn market got excited yesterday, middle of the day, and all of a sudden we found some support. And do we do that again? And I think when we look at what's happening right now for corn, we've got a couple pictures, especially now with this report ahead of us. You've got some good technical resistance up at this 370 level. We went back up, tried to get above it yesterday, but we need to also pay attention to 360, right? That was pretty close to yesterday's lows. If we now take out 360, we could potentially have a head and shoulders now on this chart. So when we talk the technical side of the corn market, we need to be very aware that if we do end up breaking that, what is down below 360? Well, you got a gap at 345.5, but then you have this head and shoulder objective down at 343. So keep that in mind as we go forward. But the technical side of things, and of course, with a report tomorrow, expect a lot of volatility. But maybe what we can see, as you mentioned, these funds, maybe the funds are going to start taking a little bit of profit on that. Or do we see a little bit of harvest pressure as we really dive into the field? So keep that in mind, but a lot of emotions surrounding this market right now.
And there's been a lot of talk about basis, and there's just no carry in the market for soybeans. Kind of switching the topic here to soybeans for just a moment. Without that carry, the market is telling farmers, bring your beans to us now. We need the beans. Obviously, this goes back to all of the sales that we've had. What are you hearing about basis and this lack of carry in the market? Have we ever seen it like this in recent memory? Well, Rich, there, what do you think here on this carry and on this basis in the soybeans?
Sure. As far as that goes, I think right now the market is giving us one clear message, and that certainly is this idea that it's time to move some cash beans, so to speak. And, you know, we haven't seen this tight basis going into fall in recent years, but it is something to watch very closely, and certainly for to make some strong marketing movements on it here, so to speak.
All right. Just as a quick follow-up then, Steve, on the technical side of that trade then, is there something that you watch for in these technicals that can give you indications that basis is starting to tighten up or loosen up?
You know, when we talk about that, yes. On a technical side, there's a lot of things that wrap into the technicals. The emotional side, what are the funds doing, right? What is this big managed money? How are they positioned? And as we talk about the corn and we talk about the funds in the corn position, look at the massive size that the funds are holding on a long position for soybeans. And so with that attitude right now is that when we do start taking out or we start slipping down below support, that means that we might be able to generate more downside movement than what we would typically see. And I think that's what we've got, right? A lot of energy surrounding export sales. But when you look at these charts, you've got right now for beans, November beans, 985. If we take out 985 on a lower end, you've got some lighter support just below that at 980, which is the yearly highs, right? We got to go back to January. But if we take that out now on a downside, it opens us up to maybe some more lower emotion down almost to that 930, 940 level. So we need to be careful of that. And that's what that emotion does as we see this market, and certainly surrounding a report or some violent news here tomorrow. So pay attention to that. But right now, 985, good support on these beans. We need to see if that holds.
All right. Well, gentlemen, we invite you to hang on here for just a moment. We're going to take a break, and we'll come back with more Market Day Report in just a moment. Stay right here with us.
Let's continue our extended conversation with the folks from Allendale Incorporated in McHenry, Illinois. We have Rich Nelson on the line, along with Steve Georgie, the president of Allendale, and John Jenkinson and myself, quizzing them about the current information and the upcoming reports tomorrow. You guys just had a recent snapshot service that you provide, and it's a new service. You might explain what that is just briefly and how our viewers and listeners can find that. And I just wondered what took place on that latest one that you had in relation to the upcoming reports tomorrow. Steve?
You know, Snapshot's great. And I got to tell you, and it's something, though, that we started to try to answer what everybody's wanting to know around these reports, much like this quarterly stock report tomorrow. How do we go ahead and how do we prepare ourselves? And so we developed a product called Snapshot. It's right on our website. So allendale-inc.com. You can go right there and get it. You can download it or see that for $1. But here's the thing, is that what it brings to you is that not only do we break down, and Rich and I had done this, and it is current right now to get ready and get prepared for this report tomorrow. So, but we break down the numbers, and what does it really mean? A lot of times USDA, they throw out numbers, and what? We all sit here and try to depict and try to find out where should we go. Not only do we look at the numbers for you, we break those down, but we also give the emotional side of the market. where should we be watching? What happens if, right? We bring a lot of that to you in this snapshot, which is right on our website. So I encourage everybody to do that. Get on the website and take a look at it. Now, mentioning these numbers, and as we really focus on what the quarterly stock numbers could look like tomorrow, we're not looking for a lot of change out of this corn. And so we come up with our own figures are based upon a balance sheet, but also some of the trade estimates that are out there, not looking for a lot of change. But the thing that we do talk about in this snapshot is, what have we seen in the past? Last year, we had a 24-cent rally for corn from these numbers. Beans ended up strengthening as well. We did see some surprises on the snapshot, or on this quarterly stock. And so we need to be prepared for that. What is the unseen event? And that's what we break down in our snapshot. So get on our website, take a look at it. We really encourage you to do that. We did this for all you guys out there so that way we can have a better idea of what's going on.
Rich, also in that report coming up tomorrow from USDA, and by the way, that'll come out at mid-morning, noon Eastern time and 11 o'clock Central time during the trading session. But it's also going to include a small grain summary. You might explain to our audience what's included in that and what kind of numbers you're looking for here.
Sure. So this is actually two separate reports from USDA. Like you mentioned, the quarterly grain stocks. Now, the other one is an annual small grain summary, and this is an update as far as revisions for production for various small grains. Now, we watch this very closely because this does include wheat production changes. Now, as far as our own estimate, we're expecting a very minor decline in terms of production, going down to 1.835 billion bushels for this year's wheat crop. That would be just a little bit smaller than the previous USDA estimate. As far as the average guess, most people are looking for maybe a small increase here. So we'll see what USDA has to tell us.
Hey, Rich, while we're talking about reports, I want to flip the calendar here and talk about next month's World Supply and Demand estimate. It directly follows this report that we're going to have out tomorrow. So fundamentally, how closely will the trade be watching what that October report says for WSDA? And traditionally, is that a big report?
It's a very big report. Now, number one, they'll be incorporating these old crop ending stock numbers that we learned about tomorrow. So that's the number one issue. In the past 10 years, we've seen anywhere from a 331 million bushel decline in this old crop stock, anywhere up to a 322 million bushel increase. So we'll start out with this as far as old crop ending stock changes. We'll get updated new crop acreage as well, and then we'll have new yield numbers. So a lot of things lined up here for that October supply demand report.
I think that could spell a little more volatility then. Steve, then how do the technicals react to that? Or are the technicals are they already anticipating and building some of that into the technicals going into these reports?
You know, I think the better way to really look at that is just, what is the emotion, right? As Rich had just said, all of the change that is potentially coming. So this is this buildup of emotion and what happens. Not only is it, how do you position yourself? How are the funds going to be positioned? Do they really want to remain long going into a lot of potential change? And so these are things that we need to follow through and really watch. But if we are going to see a decline, you know, we really have to look at the price levels that we're currently at. Do they really match up to the ending stocks that we currently have? So as we go into that October report, if we're going to stay here at this 370, 380 level for corn, we do need to see we need to see carryout drop, maybe closer to a 2.2 billion carryout in order to justify this. How about sitting at a $10 bean price? What does that mean? How do you justify that right now when USDA is telling us currently that we have 460 million carryout for beans? We need to be looking at that number and expecting to see a decline, maybe because of demand, but they need to tell us that. And that's where they need to finally show their cards. So expect to see a lot of volatility surrounding that report and expect to see a lot of market movement. So prepare yourself for that as we get into October.
All right, gentlemen, the markets are opening up as we speak. We're going to give them just a second to kind of get established in their early momentum. So we're going to take a break right here. We'll come back in a moment and we'll talk more with Rich Nelson and Steve Georgie. We'll see how the markets are opening in real time right after this. Well, the markets are open, and just a reminder, a little bit ago, USDA did report an overnight export sale, and here's a quick peek, and we'll see if it has any market influence or not this morning. It was a sale. This time it was soybeans. It was 100,000 and it was 100,000 tons actually of soybeans to Mexico. It was not to China. It was to Mexico. China not mentioned once again. Wonder if that'll have a detrimental impact here. Let's open up our markets with these quotes provided by Bar Chart. Here we go. Let's go to the corn market first. We have December opening 2 3/4 cents lower at $3.64 per bushel. We have the soybeans that we wondered how they would open. November down 9 1/4. 9.87 per bushel is the last trade. We were at 9.97 3/4 overnight for a high, so over a dime off of that already just in the first moment or two of trade. Let's see how the wheat market is opening up with Chicago December down 1 3/4 at 5.48 1/2 per bushel. In the Kansas City market here in the early going, December down 1 1/2 at 4.81 1/4. On the Minneapolis wheat today, we have the December opening up 1 1/2 lower at 5.28 per bushel. That's 4 cents off of its overnight high. We're talking with Rich Nelson and Steve Georgie of Allendale. Rich, how much does the end of the month and the end of the quarter coming up tomorrow play a role in what could be happening in the markets here today and tomorrow?
You know, that's actually a really good question, because we're still 6 cents higher than where we started the month at for corn. We're still 33 cents higher for soybeans, even with today's lower pricing right now. So that's certainly a big question for us right now. Do we keep this premium in store, especially one extra thing we haven't discussed, the price for U.S. beans versus Brazil? That has changed as well this past few days as well. So a little concerning issue on both ends.
Steve, technically, over here on the soybeans, and as Marlon just mentioned, now we're flirting down there with that 9.85 that you had mentioned earlier. So technically today, if we would end up closing below that 9.85 or right at that 9.85, how many closes or settlements there do we have to have before we start worrying about this next level here of 9.80 and then maybe down to 9.50? Steve? Well, Rich, there's the question then. Do you think that we would still have some support in here if we do settle below that level?
You know, this is actually a concerning issue, because we have broken the uptrend line for this soybean market about 3 days ago. Now we're breaking some other signs of support. So definitely for the very short term, this is a little concerning issue for us right now.
Okay. We haven't talked much about wheat today. Your thoughts then on wheat?
You know, for the most part, this market has been a little concerned about dryness for U.S. crop, dryness for Argentina, which in some ways has been alleviated, but there's also some concern right now with the Russian situation. So I do agree with this idea that beans are taking a little harder hit for today's discussion, but we can maybe trade a little mix to slightly lower instead of a good break in price.
All right, let's ask about the U.S. dollar value. We've been watching this a lot here lately, Rich. The U.S. dollar index shows December down 197 points again at 94.105. It got really close to taking out 94 cents earlier. So how much do you think that is at risk of going back to test those earlier lows we had?
You know, I think in the very short term, with our political issues and with our general economy issues, I'm not quite sure we're going to be breaking down here just yet. In fact, I'm still concerned about this rising U.S. dollar and its impact for us on the Brazilian real. In fact, we've changed the U.S. soybean pricing relationship with Brazil strictly because of this problem right now.
Well, gentlemen, we do thank you for all the time this morning and excellent insight into what the markets may or may not be doing here for the next 24 hours ahead of that report. Thank you for joining us. Rich Nelson of Allendale and Steve Georgie of Allendale joining John Jenkinson and myself with a look at our market action. We'll have more of our Market Day report coming up in just a moment.